Okay, welcome everyone. We'll start our lesson one. Today lesson will go through LO1. As you know me, my name is Anjum Satra. If you have any question, please drop me email anjum@ukiversity.co.uk and I'll try my best to get back to you as soon as possible. So today lesson will go through our LO1, and before starting, we'll quickly go through our unit specification, what we're supposed to learn next few lessons, and then we'll start our lesson. So as you know, the unit which we are starting is the personal taxation, unit 5. We'll go through, understand the theory, then the principal taxation system, which we'll go through. So today lesson key focus will be explain the key principle of the tax system, especially for individual. We'll go through the key features of the taxation system in the UK. Of course, you can, if you're different part of the world, you can use local taxation system as well, local tax, local rules and regulation and the rates, and we'll discuss about ethical consideration. Lesson 2 will go through, we'll calculate the income tax, national insurance contribution. Lesson 3 will discuss about uh, capital gain tax, see learning outcome, and then to the lesson indicative content will go through the principle of UK tax system, tax basis, tax structure, tax planning, which is a legal and tax evasion. Of course, it's the illegal way, and we need to be look around the tax avoidance. All these people looking the loopholes, but we need to be look around the morally and ethical side as well. And that will be then current legislation, that will be which will follow Finance Act 2023, which is applicable until 2024, 31st July, until we'll carry on doing and we apply these return on our return these rates. So then all these lessons will go through. This most of you are already working in accounts, so all you have experience, you already know the basic stuff. Okay, so please I'll carry on embedding the example of which is ACCA, Finance Act. And please, if you want to download the booklet, I will send you as well. I will share with you. Uh, I'm not sure you are already on the open tuition, and we can look around taxation, which is F6 exam of ACCA. So that's, it's quite similar. It's quite good mapping. And for assignment purposes, we can add, some examples from these handouts as well. So yes, please, we'll go through the rates. As you know, the basic rates, which is if 12,570 pound is the personal allowance, you don't have to pay the tax. If you earn more than that, you have to pay the tax is 20%. What do you think? Is it personal allowance always the same for everyone? Or it can be vary? Any thought about personal allowance? What do you think? If somebody have a company car, so you think the personal allowance will stay the same or it will be changed?
It will change.
Okay, great. So because of course, it can benefit in kinds. When you have it, your personal allowance can be changed. So car come under, of course, then we need to look around the car size, engine size, CO2 levels and all, we need to look around. And of course, your personal allowance can be. Our personal allowance can increase, like if you have a marriage allowance, yes, that can be transferred. So your free tax limit instead of 12,570, it can goes more than, it can goes up to 15. Any related expense which you can request to your employer can put it, and that can be your tax code can change. Those are allowable expense. Those we need to look around instead of you claim back. So that tax can be adjusted. Okay, so if you are earning more than 125,141, so what will be happen? The tax rate will be 45%. And please, if you earn more than 100,000, your personal allowance will finish. It means every pound you earn more than 100,000 divided by 2, your personal allowance will be. So if you are earning more than 126,000 approximate, so your personal allowance almost will be finished. So you have to look in and you have to keep in mind, your personal allowance will. And 40% tax is if you earn 37,701 pound or above. And if you're taking out the dividend is 8.75, 33.75 and 39.735% now according to saving rates. Yes, of course, it's the basic taxpayer. If your rates is fall in 20%, first 1,000 will be exempt limit on the saving income. Then if you're a higher tax rate, 500 will be exempt. If you're earning more, if you're getting dividend first 1,000, nil rate, and after that will be rate 8.75% until 37,700. Thus, we need to be look around. Starting from zero, apply the saving income where it falls, the first 5,000 and so on. So these are, it's quite good handouts to look around the rates, okay, with good few examples for our assignment purposes, which we can, of course, when we go through our LO2, where we'll do the tax calculation, and we can use, these examples. Well, I'll send you the booklet. Okay, let's please, we'll start. Please, if you have any question, you carry on asking. So always can interrupt me, you can ask, which is quite good. We can discuss. Okay, so our LO1, which we said, understand the theories and principle of taxation system. Always good to be reflex. Taxation. Okay, so we can look around scale 1 to 10. Always good to be reflect what we know about personal tax and the rates of the finance act, and as indicative content, which we just mentioned from the modules specification, unit specification, which we go through the key contents, and overall our discussion will cover all the key. So corporation tax include taxation on total profit, chargeable gains, will go through value added tax and various rules on. So we already mentioned the income tax and the rates, which is given in the Finance Act, which I just shown you ACC link, and that's I'll share with you as well in the chat box, which will be very good to use and pick the example. Yes, if you're not resident, so less than 16 days automatically not resident. If you're living 16 to 45 days resident, if UK 4 ties or more, which we can automatically not resident. 46 to 90 days resident, 3 UK ties or more, which will go through. And if you're 91 to 120 days resident, 2 UK ties or more, and if you're 121 to 182 days resident, 1 UK tie or more, which is we can look around not previously resident, then and 183 days automatically resident of the UK. So if you're living abroad more than 183 days really, then of course, we can look around your benefit, of course, can be stopped because your residency break. And then of course, we need to look around some implications. A lot of these questions carry on how long I can stay abroad, so not affect my benefits or all of this. So we can look around where the income between 50 to 60,000, the charge is 1% of the amount of the charge benefit received for every 100 pound of the income over 50,000. That's 100% of the property income. Finance costs are subject to the basic rate of restriction, which we can look around, and the car benefit under separate, the element benefit in kind. That's the big topic really we can look around according to their emission level and the percentage. Fuel in benefit, always good to be, of course, it's our own personal purposes. We can claim the fuel, so we can look around electric cars. We have a different rates for it, so we can look around those. And normally we can look around the fuel allowance. So the mileage we can claim. So first 10,000 miles is 45 pence, and remaining is 25 pence. So that's so we can look around capital allowance all and manpool, those which we will discuss in our following lesson. questions. And of course, in other subjects, if you're doing advanced taxation, we'll do more in detail. So minor release, capital allowance, yes, late penalties and days. So everything is a given in the finance sector. We need to, and especially in the taxation, we need to apply these rates for our calculation purposes. Tax planning is illegal, of course, we can, and we can plan the tax method. Okay, so let's explain the key principle of tax system used for individual, the purpose, the tax system, professional ethical framework. We have to look around tax avoidance versus the tax avoidance, which we dealing with the HMRC types of tax, direct, indirect taxes, of course, VAT, and indirectly you paying and directly being collected from at source. HMRC, we can look around different laws, case laws as well. That we need to be followed. Of course, taxation purposes, main thing is that need to be look around the residency rules. Taxation for individual, the main tax applied individual are income tax income in the tax year, and the national insurance charge on the earning of employees, and charge on the taxable gain in the tax year, and inherent tax. Inherent tax is a lot of rules change, so we can look around 325,000 is carry on changing, which further we can explore under the Finance Act. The connected person 7 years before death rules, and connected person, those are family, close, and ties, so those we can look around as well in tax. A good tax system should meet the basic, the condition: fairness, advocacy, simplicity, transparency, and administrative ease. Really, we need to be easily managed. Like nowadays, government, you can set up, the gateway IDs. Of course, you can see and manage your tax matters yourself as long as you have a basic, knowledge about tax. And if not, of course, you can hire the services of, like we provide the services. So 5 basic conditions should be believed that a tax should be based on the individual ability to pay, known as ability to pay, principle, the benefit, principle, the idea that should be some equivalency between what the individual pay and the benefit, particularly receive from the government activity. That need to be, people can object, like not using BBC, not watching TV, but paying the uh, tax on TV. So that's a lot of question going to, and a lot of discussion going around, and people signing. So that's the 4th, which we can look around, uh, interpreted emphasis on the economic place. The tax system does not interfere the market decision making, as well as the more obvious, need to be avoid the complexity. Really, we want to reduce the corruption in and money laundering. Really, is a matter of feature of the tax system is fair, absolute, convenient, efficient, direct, indirect taxes, which we can tax rate structure can be progressive, proportional, and regressive. Okay, so we can look around the government need to be revenue on the finance expenditures such as health and all through the taxes, of course, the income for the government. And we have to charge the people on accordingly, but as long as your income increase, your tax bracket increase, that sometimes is a question mark or can be demotivate people. Those work really hard and not a one band. So a lot of discussion going around and the research about the government income can increase if the one tax slash and there will be shortage of the workforce, and that those are the issue can be addressed. So direct taxes are imposed directly on the person or the enterprise required to pay the tax, like a personal income such as the salary tax and business tax or the tax, disposal of the chargeable assets, the capital gain tax, can be indirect tax, that is the VAT, which is indirectly can be, and that's, based on the individuals. So VAT is imposed as the final So technically input output VAT, of course, we can look around input on the purchases and output on the sale, which it means technically we work as a tax collector, which we can collect the tax and pay to HMRC. So income profit, income tax, corporation tax, asset companies give the corporation tax, individual give the income tax. So asset, capital gain, consumption, VAT, and progressive, these is increase the proportion of the income as the income rise. For example, income tax is charged 20, 40, and finally 45%. This is called progressive tax. So proportion, these takes the same proportion of the income as the income arise, proportional tax. And regressive tax, this is takes decreasing the proportion of income as the income rise. For example, national insurance contribution charge 12 or 13% now, and then 2% on the additional. So that's a regressive tax, which we can look around these. So social justice, the type of the taxation structure imposed on the direct, can be. So we can look around social justice rules, equality rules. We have a lot of discussion. Progressive taxation, income rise, the proportion of the tax, also rise 20% and 40% and 45%. Previously, now is 125. So that's the government is looking these limits and increasing and decreasing. Regressive and income increase, the proportion of the tax bill falls. For example, the tax on the liter of the petrol is the same regardless of the level of the income of the purchaser, and this is the regressive taxes represent the greater proportion of the income, and proportionally the income as the proportion of the tax remain the constant. For example, 10% on all earning regardless of the level. So that can be proportional in some countries. That's used as well. Okay, so we can look around, explain the features of the tax system. Is income taxable include income tax computation, which we can look around to calculate the income tax and all the source of tax income. Exempt, those we can, and we can look around even the losses and carry forward and brought forward up to 5 years. Good taxation system should be five things there. It should be the condition of fairness, advocacy, simplicity, and transparency. Administrative ease, these are the crucial thing. ACCA believe the commitment of achieving simplicity in the tax system produce reduce costs of administration. That's QuickBook and all, it's reducing greater accountability through clarity and transparency, improve the stability because of the potentially unintended consequences that need to be counteracting measures to reduce, and we need to be notable that reducing the administrative burden on the business appears to be more strongly linked with the economic growth and the tax rate. That is the benefit to economy. So changing the tax rule affect the tax base and the economics and the compliance cost. We can look around regularly, the change, the greater cost for the smaller businesses. That's huge. We need to be really look around those, and of course administration and efficiency and making it easy for the government, like e-government, e-taxation, e-management. These are becoming now artificially intelligent and contextualized. So tax planning is illegal to use the legislation to minimize the tax bill. Like a husband wife, everyone is entitled 12,570. Tax avoidance is the legal use the tax legislation but not following intent the law and use the unintended loopholes. So that can be used what is unethical. Tax evasion, illegal ways to pay less tax, by concealing income. So that is it's really scum crime and can be charged. So the purpose of the taxation to raise the money of the government, of course, through the its fiscal policy. Fiscal policy is the policy of the government about income and spending, and the taxation is come. And the monetary policies increase or decrease the tax rate, like the base rate at the moment, which is decreased by a quarter cent. So that can be huge, impact on to control the economic activities, economics growth. So those, which we redistribute well to control economy, recession, boom, encourage, discourage different activities, pension contribution, smoking, import and export. That can be foreign direct investment, can be huge, those we can look around. So principle of taxation system neutral, where not always true. We need to be look around efficient cost and benefit, simple and certain and effective and fair based on the ability to pay. Those people have a high income, so they can pay higher tax. So we can look around tax liability. Of course, we can within the years, like we from April to 31st March, and we can pay to HMRC of the year. So we are using Finance Act 2023. The objective and the function of the taxation, what is the tax structure, what is the tax base, and what is the tax rate. So we can look around, and then of course we can pay all inherent tax, income tax, or capital gain tax, and NI contributions accordingly. Okay, so progressive, regressive income tax base, unbanned, regressive, not fair, and proportional VAT can be included. Okay, so we can look around the taxation system, fiscal year assessment, legislation, act of parliament. We can find the finance secretary, instrument, civil servant, or details rule operation laid out before, and the case laws, which is of course tribunal and the court, interpret things accordingly. There are the complicated, cases. Statute, which is mean the act of parliament, the case law, and HMRC guidance on various foreign transactions. So we have working and publication, those can be used for the guidance purposes. So residencies and domicile stay, short term tests, particularly easy to lose gain, and long term tests, real home, country of birth, father's status. These, domicile, which we can look around. Domicile originally from fathers at birth, dependent until age of 16 in choice. So sometimes it's a dual national, and those, we can look around the perspective as well. The tax purposes. So residence is in the UK, domicile is the UK, long-term home in the UK. So we can look around tax, which is not resident. It can be, so we have to look around the UK income tax, overseas income exempt. So or resident tax, remittance tax, risk, we can look around on research and development, as well as the dividend and other income. We can look around the taxation accordingly. Tax planning. So legal ways, the government intent and the pension and the scheme sometimes contributing more towards, of course, a lot of legislation change towards income, spouse, and which we can transfer, which is illegal for the tax. Gray area, using law not as a government intended, complicated area, bending the rules, exploiting the loophole from the substance, and could be challenged and maybe involve the artificial transaction, or maybe legal but unethical. So that's, like giving money to these, sometimes the charities, which is good intention, but sometimes people can use the loopholes. Okay, so tax avoidance, self-employed businessman, wife employed, genuine workers, level of pay. So that's the loopholes, like, everyone entitled 12,570, showing workers' wife as the own company, as the employees, and then claiming the salaries and increasing the expense for the companies and individual for the income. Always we can look around, always illegal, not declaring, overstating expenses, understatement of revenue. So that can be illegal. So tax avoid, using the law, legitimate tax avoidance, which we can law to reduce the bill, possible illegal, unethical, and breaking the law, which is tax avoidance. Okay, so PPCIO, what is the PPCIO? The word stand is called popular people chat in office. What is popular? Some people are very famous, they carry on chatting in office. These are called 5 professional code of ethics. So what those are 5 professions? First is a professional behavior. So we have to look around our behaviors, true and fair information as professionally competent, competency and due care. So which is mean up to date knowledge. That's why we have to do CPD every year, continuous professional development, like finance sector, attending ATHE, ACCA, online webinar, seminar, or Open Learn is quite good website we use. See the confidentiality. Of course, we have to look around the rules of, we have a GDPR, we have those, but we have also ethics as well, not declaring information. Objectivity, our objective to provide the information in line with the rules and regulation. We have to ask the client, so not compromise our objectives. See, these are the 5 professional code of ethics. If you're a member of ACCA, IFA, any others, really, these are common, the ethics. So PP, CIO, popular people chat in office to easily remember. Sorry, we miss I, is I is popular people chat should be IO, popular people chat in office. So we can say I is the main integrity. So integrity means honesty. So we have to look around. We have to be honest with their affairs. So we have to look around these objectivity, the integrity, and these are the ethics which we have to follow as a practice in accounts and in tax. Yes, so we can look around confidentiality, the rule and return. And of course, wider interest of the public is always important. That can all the laws can be supersede responsibility, client, money laundering. Of course, not putting the client money in your own accounts, following the professional ethics, omissions that need to be adjusted accordingly. Of course, not intentionally it come under fraud, but we can follow these, the rules and regulation of ethics, uh, money laundering officer we should have in. We have a money laundering and up to 14 years can be imprisonment. And we have crime proceed act. We have a bribery act. Those we all, need to be follow, and we supposed to be as accountant get the training about the money laundering. Yes, we carry on training, and we supposed to be up to date, with these training requirements. Okay, take care about the client documentation. Of course, asking them bank statement, invoices, and then submitting the reports accordingly. That's we need to be ethically. And please, here is for further reading the links, and I will share with you the link which I mentioned you earlier in the chat box. So please, it's quite good to look around various examples. Latest Finance Act 2023 to using, and the next lesson will go through our LO2, which will be more focused on tax calculation. So of course, residency need to be look around the domicile, staying in the country, income from the UK, overseas income can't be technically not. So we have to look around the domicile requirement, connection with the UK, living in the UK, house in the UK, father are British born or the domicile, what are the rules for. So these, can be look around in legal perspective. Okay, thanks for anybody. Any question before we finish?
Yes.
Yes, sure, please.
I have noticed on the LO1 you used, there are 52 slides, but the one I downloaded from Moodle, there are only 37.
Okay, yes, because the reason I included the new rates on the slides, I'll share with you.
Okay, so
I can share with you in the chat box these slides here, and you have a copy of this.
okay.
The finance act carry on chaining. The rest of the slides is exactly the same. I shared with you the tax rate, but other than that, so I'd share with you these slides too.
Okay.
So that's the key difference. You're absolutely right, well picked.
I see. Okay, thank you.
I included the latest rates on the top of the slide.
Yes.
Number of slides increased instead of decreased. So I'll share with you now the personal text and LO1. Okay, so I shared with you. Please, you can download from the chat box here for the sake of, and I'll share with you the booklet in a minute.
Okay, yeah, thank you.
So please, are you on the open tuition or not? You're not set up account, or have you set up account?
I think I am.
Okay, so which we can download, but I can share with you after downloading now. So the booklet is quite good, to date, with some calculation and the rules. The booklet is quite useful. And I'll share now. So you have that's which is cover our F6 exam of ACE, which is quite mapping with unit. These are the free resources good to use. Because our assignment based, and we can pick examples for the sake of to meet the learning outcome, and that's quite good to show you these resources. I can send you. I have books, of course, but the application of the new rates is a matter of picking example, then of course applying the new rates, because the rates carry on changing every year, and sometime in the taxation, so we have to embed the new rates in your whatever resources you have. Okay, so I shared with you now. Yeah, ACCA textbook. These notes UK. So hope so will help you as well. Okay, that's all from my end. And any other questions, please, before?
No, thank you.
Thank you. Thanks for attending.
Let me just download what you have sent. Just a minute before you close.
Yes, sure. If you click, you can download. Please.
All right. Yeah.
So LO1 is slides and ACCA. Yeah, these in the booklet, which is from Open Tuition. Of course, ignore the exam dates and things because you're not examined, because it's a matter of assignment. But we can pick examples. These books, and we can refer Finance Act 2023, which is of course currently we are applying. Finance Act 2024, we have a certain dates, after 31st January, really we apply, the new Finance Act. Okay, so that's all. Any other questions, please, before? So today the key focus was really basic taxation system, direct, indirect tax, and tax planning is illegal, as we discussed, So, and the basic, the personal allowance 12,570, we need to look around in terms of, any benefit in kind, or if it's a marriage couple, so we can inform to HMRC, of course, your tax allowance, or any related expense can be transferred and tax code can be adjusted automatically, then of course, instead of claiming back at the end of the year. So that's all from my end, and we'll see you next week. So
all right.
Have a lovely weekend and enjoy. Hope so weather will stay and behave good. Thank you.
All right. Thank you.
Have a lovely weekend. Take care. Bye-bye.
Bye-bye.